Hello there. We end a week that saw the Fed keep interest rates on hold. Asian markets hit 2016 highs. Draghi tells EU leaders to get a grip, and UK Chancellor George Osborne, he announces a sugar tax. So what awaits us on Monday? Well, first of all, just want to say that we are going to get an Apple launch. It's going to be a new iPhone, so we're looking forward to that. Also, 10th anniversary of Twitter as well. But let's have a look at some of these data releases that we've got coming up. On Monday, kicking things off is Australia House Price Index, UK Industrial Trends Survey, US Chicago Fed Index, and Eurozone Consumer Confidence. Tuesday, we've got the Japanese Nikkei, the manufacturing PMI data. We've got Germany, IFO Business Climate, France, Germany, Eurozone, US PMIs as well, and the UK inflation, retail sales, Germany, economic sentiment. Middle of the week then, we've got the China economic data to look forward to, the UK mortgage approvals, mortgage applications as well, and oil inventories. We are going to discuss that in just a moment, and also consumer confidence coming from Germany, French business climate coming up on Thursday, and UK retail sales as well, US initial jobless claims. Friday then. Yes, from Japan, we've got the national and the Tokyo inflation and the French GDP, consumer confidence data, and the US fourth quarter GDP as well. And that wraps it up. So let's just discuss what we're going to keep our eyes peeled for. Got Chris Beecham right here, our analyst, to discuss what you're looking out for.
It's an interesting week, I think, in terms of certain economic data. Not so much central banks, which dominated the week just gone. As you've mentioned, we had the Fed and Bank of Japan weighing in on the markets. The coming week, it's those PMI data numbers to start with. That's going to be key for all those countries. The Eurozone, you've got France and Germany, you've got the US as well. So that's going to be the most probably important thing to look for. So if we looked at the euro in the context of that, now we've had certainly over the last couple of months, we've had a very strong rally, and actually this month as well has been a very good performance as well. Of course, defying what Mario Draghi might have wanted with the weaker euro, perhaps helping the Eurozone. But it's heading towards this 114 level at the moment, and that's the key one to watch out for, I think, certainly. If you get some good PMI numbers through here, you might actually see a continuation of this, people buying the euro with a bit of dollar weakness thrown in as well. And if we get beyond 114, then definitely we're looking, if we can zoom out on the chart, we can see that we could really go towards sort of 115, even up towards 116 that we last saw during the third quarter of 2015. So that's what we're looking for in the euro at the moment, but it's that 114 level certainly in focus at the moment.
And the UK then, we've got the CPI numbers coming out as well. Obviously, it's been a busy week for the UK with the budget.
It has been. I think we've had a positive reaction. Again, it's dollar weakness driving most of these currency pairs at the moment, but people broadly happy, I think, with George Osborne's outlook for the year. In terms of monetary policy, the Bank of England, of course, did what it did yesterday, which is nothing, which is the same for the past sort of 18 months or more now, really. If CPI data comes in a bit stronger than expected, and you might get that starting to feed through, we could see this, again, this very strong trend that we've seen in March actually beginning to accelerate, because this is the broader trend, i.e. down, but actually if we zoom into what we've had from the end of February into the rest of March, again, it's a powerful move, 500 points on near as, really, I think, since the first trading day of March. And so we're looking for it to head back towards 147 thereabouts, which we last saw really during the first week or so of February. But you can see how the trend in this time frame, at least if we were to look at the last couple of weeks, is definitely higher. So you're arguing that we wait for the dips on this line, and maybe we get a CPI reading that gives us that sort of dip, perhaps down towards 143, 142.50, and then it starts to move higher once again. So that's probably the two key events of the week, and I think that's probably the most important thing. Maybe if we look at oil as well, those inventory data. The interesting story with oil at the moment is there's this rally that keeps on going, and people are very keen to call the end of it. But you've got key oil data as ever this week on the Wednesday. We're expected to see US inventories slightly stronger, so the amount of oil available rising. But crucially, what's been driving actually some of these bullish moves in oil has been the gasoline inventory number that comes out at the same time, and that's been showing a big drop in stockpiles. And that's sort of one of the key things that this bullish move has hung its hat on, to say you can see the demand story beginning to pick up, and that's crucial at the moment. Now, the trend remains the same as for equity markets, i.e. high. We've had it moving higher and higher and higher, and it was selling off on Tuesday of this week, and everyone said that's the beginning of a sell-off in crude oil that goes on for longer and longer as the supply story comes back in. But it stormed higher, with 15% higher from Tuesday's low, and I think it could be the case that you get dips like this in the rally in crude oil over the next couple of weeks, but they continue to be bought, particularly, as I say, if that gasoline inventory number on Friday, about Wednesday rather, comes in and we see a bigger drop than we expected.
And we've got oil majors meeting on April the 17th, I believe, in Qatar. See what they come up with then. All right, so just to conclude, we've got PMI, CPI and oil to look out for in terms of the economic data. Let's have a look at the corporate data and see what is catching our eye next week. Okay, so we've got the gold mining company there, Sentiment. On Tuesday, it's a busy week for the corporate data. We kick off with Jimmy Choo shoes, and we've also got Nike as well, if you like prefer trainers maybe, and Krispy Kreme if you like a donut or two. On Wednesday, we've got Kingfisher, which we're actually going to go into detail in just a second for you. On Thursday, we have got Next as well. So it's a bit of a fashionable week, and nothing on Friday because it's, of course, Good Friday. We'll be gearing up for the Easter weekend. All right, I mentioned Kingfisher then, Chris.
DIY owner Kingfisher's had a good rally in the share price off the lows of the year thus far, and maybe it's because of a change in expectations. Really, over the course of 2015, this narrative was that we'd see falling demand for DIY products in the UK, that people aren't so keen to be doing their own home improvement, they'd rather get someone else to do it rather than have to go through the effort. Certainly that would be from my perspective. But if you're looking at the share price, it has enjoyed a very good bounce. The question is now, we're through that 200-day moving average, that red line there. Can these full year results show whether we're going to see continued improvement here, i.e. will they put a good outlook on the year? And you can argue that actually we are seeing an improvement here, and that we could see the firm continuing its turnaround program, continue to cut stores as and when necessary, which the city would view as a good thing. And that might help it to break out of this longer term downtrend. We can certainly see it pushing on, maybe back towards £3.70, the last sort of high from September and October, and that would just remain consistent with this trend. So we're definitely keeping an eye on that one. But it's not a busy week for corporate updates. As you mentioned, we've got some eclectic names coming through there, but there's nothing really blockbuster in this sense, particularly of course we're heading towards Easter. So I think the focus of the week really does lie with that economic data. And broadly with indices as well, we've seen such a strong rally over the past 5 weeks. Breadth has been very strong. The number of stocks making new 5, 10, 20-day, even monthly highs has been very strong here and in the US. And I think that points to actually we could see, with a bit of weakness maybe in the first couple of days of next week, actually indices beginning to push higher once again. And of course, as we've been saying for the past 5 weeks now, it's probably dependent on what oil does. But actually, if oil continues to be strong, I think we could see strength coming through in equity markets as well.
All right, Chris Beecham, thank you very much indeed. We will wrap it up there. That's your economic data, your corporates to watch out for on the week that begins on Monday, the 21st of March. And indeed, for this part of the world, it is a 4-day week because, as I say, it's Easter coming up. So have a great week, a great weekend. Goodbye.